And then there is this pardoned Democratic Representative Henry Cuellar joining Sunday Morning Futures, describing how the Biden-era Department of Justice tried to bribe and entrap him. Watch this.
First of all, we're innocent, and we have looked at all the evidence that got provided through discovery. I'll emphasize this, not a single person said there was a quid pro quo. In fact, they failed at showing that quid pro quo. And Maria, they even went and did a sting operation, a separate sting operation to try to bribe me, and that failed. And what they did there was wrong.
Wow. Entrapment, bribery. Congressman, tell me specifically, who tried to bribe you? You mean Biden's DOJ tried to bribe you?
Yes, they did. The sting operation, they set up a false company, false account. They took out the money, and they said this money was to bribe me. They try to use this money. They talked to my D.C. staff. My D.C. staff told them no, there was nothing there. So they actually returned the money back to the account because they couldn't bribe me. Everything came in from the DOJ in D.C. Everything came from the DOC office there. The local office, that is the one in Houston, never got enough. And from my sources, they did not get involved because they felt there was not a case.
Cuellar filed to run for re-election as a Democrat shortly after President Trump announced that pardon last week, Maria.
You know, Cheryl, Henry Cuellar complained about the wide open border a lot under Joe Biden's leadership, okay? So Joe Biden in office almost 4 years. And throughout that time, Henry Cuellar, because his district sits right on the Rio Grande, he many times said this wide open border is bringing in criminals. This is not safe. 350 people were identified as being on the terrorist watch list. And I'm wondering, Liz, if that's the reason that he got indicted in the first place.
Well, we hear a lot about retribution from President Trump. All his critics say, oh, he's out for vengeance, et cetera. I think we saw a lot of that under Joe Biden. It wasn't just Cuellar. It was also Eric Adams, the mayor of New York, if you remember. They went after him because he, too, dared to speak out about how these illegal migrants were damaging New York City. Maria, I think that's totally right. I think Trump is angry that Cuellar is not going to be joining the Republican Party. Democrats have been after him. They've done nothing for him. But honestly, and by the way, this is a district Republicans have tried to switch for decades. And no, not decades, but for several cycles. Trump won it by 7 points in the 2024 election. So it's clearly a district that's up for grabs. But frankly, I think having a conservative Democrat in that seat, frankly, that could be just as valuable to the administration as having another Republican.
Yeah, if he votes with Republicans.
Yeah, definitely.
On some issues. Now, you know, look, I understand what President Trump's point that he was making earlier on Sunday with that Truth Social, basically saying no more Mr. Nice Guy next time because he's running for re-election as a Democrat, you know, suggesting why wouldn't he just join with Republicans? But it was the border that really resonated with Republicans because he was very honest throughout Biden's term. Here he is in 2022. Watch this.
I believe in legal migration. I don't believe in illegal migration. And as we've said in the past, if you have 100 people that ask for asylum, 10 to 12% are going to be accepted, and the other 90 to 88% are going to be rejected. So why are we letting everybody in?
I mean, Cheryl, here's a guy who's against the Joe Biden policies, and he went as far as telling me yesterday in that exclusive interview that they tried to bribe him. And he's still a Democrat. He's still running for re-election in the Democrat Party. They just tried to bribe you.
Yeah, absolutely. And what's interesting is that the Democrats are still out there stumping, trying to protect illegal migrants. This is the platform that the party is jumping on, and that may be unfortunate for Cuellar running for a Democrat in that district. That seat could go Republican, especially after what has happened with him. But, you know, back to Liz's point about the Biden administration. Anybody that spoke out against illegal immigration was squashed. Eric Adams is a perfect example. He went to the White House 10 times complaining, and they blew him off.
Yeah, and with Henry Cuellar, his punishment was an indictment for him and his wife.
Republicans have made it very clear that we would like to work with Democrats to address the affordability of health care and find solutions that actually reduce costs. But as Democrats have made clear with this, quote, clean bill, they're not really after health care solutions. They seem to be okay with a 90% fraud rate. They're after a political issue to attempt to batter Republicans with during this next election year.
That's Senate Majority Leader John Thune criticizing the Democrats' health care plan, accusing the party of prioritizing politics over real reform, as Obamacare subsidies are set to expire by the end of the year. The Senate expected to vote as early as Thursday on the Democrats' proposal, which extends those tax credits for 3 years. Some Senate Republicans are backing an extension with income limits and anti-fraud measures. Others favor giving money directly to Americans through health savings accounts. Joining me now is Montana Congressman Troy Downing, a member of the House Financial Services Committee. Congressman, good to see you. Thank you so much for being here. And I know the House Speaker is expected to introduce a House-backed health care plan later this month. What can you tell us?
Well, first of all, I just want to point out that, the big conversation has been about the enhanced premium tax credits or the Obamacare credits. And the problem with that, if they're allowed to expire, premiums go up. If it's extended, premiums go up. It's already baked into the system. And a lot of people don't understand that these filings happened months ago. The open enrollment period is effectively closed for the 2026 calendar year, and that's already baked into these premiums. And so if we extend it for 6 months, no effect. If we extend it for a year, it really has no effect for the 2026 premium year unless we go through the whole process now that everybody's already purchased their insurance on the marketplace. And just to be clear, this is only for folks that are purchasing their health care on the marketplace. This doesn't affect small group, large group, any of the other classes. It's just for that individual market. And these prices it's already baked in for the 2026 calendar year. So if we did, let's say, a 2-year extension, we would have to go through the whole process of allowing the payers, the insurance companies, to refile new rates with these premium tax credits extended. And then we would have to open up a whole nother open enrollment period. So when's that going to be? January, February, March? I mean, we're already into the premium year. I mean, the whole thing is a mess. But one thing I will say that Leader Thune was talking about is we need to have a good faith effort on both sides of the aisle. We need to get the Democrats to come and not politicize this, because we all agree on one thing. The Democrats and the Republicans all agree that the Affordable Care Act, that Obamacare, has been a complete failure, and nothing has done more to raise the costs of health care and health insurance than the Affordable Care Act. And it's really easy to understand why. You added, coverages, the essential health benefits. You added coverages to the insurance companies were required to cover, and that raised prices. And as you raise prices, healthy people come off because they don't want to pay that additional price. And that's called adverse selection. It concentrates the risk, so that makes the expenses for the insurance company go up. And you get into this spiral of constantly prices going up, more people coming off, and it's not the people that really need it, it's the people that are healthy, and that's the spiral we're in. So we need to have good faith conversations with our colleagues on the other side of the aisle on what we can do to address costs. And that's one part of the conversation that nobody's talking about.
Well, I mean, President Trump has been talking about it, certainly, and coming up with new ideas to try to get prescription drug prices lower. But where do you think the subsidies conversation goes? Do you think he'll do anything, the Congress will do anything by year end?
Well, there's two parts of this conversation. There's folks that are worried about doing something with that, but the question that nobody's been able to answer for me is, what does that look like if we actually extend those subsidies? Does that mean we have another open enrollment period? Do we completely, upturn the cart and sometime in the middle of a policy year suddenly have everybody who's already bought their insurance, already made their selections for 2026, have to go back and do it again? So it's not really clear what even the mechanics of that would look like right now with the system that we've inherited.
Congressman, let me switch gears, because your new bill just cleared the House, the SBA Fraud Enforcement Extension Act. It's aiming to crack down on COVID loan fraud, and I guess there was a fair amount of it. Tell us about the bill.
Yeah, well, first of all, we're estimating about $200 billion in fraud. And these are bad actors with the restaurant revitalization program. There's programs that were there to help businesses that were adversely affected by the forced shutdowns during COVID. And there were a lot of bad actors there. And so the statute of limitations on that was 5 years. That's coming, that's closing in on us really quickly. And investigators haven't had the time that they need to actually go after these bad actors. And so what this bill does is it extends the statute of limitations for 10 years. So we get an additional 5 years so that these bad actors can be investigated and those who cross the line prosecuted, and we can start clawing some of that back. And it's really unfortunate we have to do that, and that so many people took advantage, to the tune of $200 billion against a program that was intended to help businesses that were adversely affected by the COVID pandemic.
Yeah, we're with Paul Morrow this morning. Paul, jump in here. This fraud was talked about so much when it was first uncovered, and now we hear what the congressman's telling us, $200 billion. Your thoughts?
Yeah.
Well, my question would be that any federal money that's rolled out that the states get to administer has to come with very strong federal safeguards, because from the state level, these things are viewed as OPM, other people's money. We're seeing it in Minnesota relative to the billions going overseas, funding pirates, funding terror groups. And I can tell you, any law enforcement officer who's worked front line has seen the massive amount of fraud that occurs relative to money coming into the states. And here in New York City, it is another pandemic, and it's very, very frustrating to see, because we don't seem to have the mechanisms to counter it. And so all I would say is, going forward, in addition to extending the statute of limitations, which is, of course, direly needed, mechanisms to capture this stuff at the state level. Perhaps the states have to be cut out of it, but I can tell you that at the state level, they view this as money that just came in the transom.
Congressman.
Yeah, well, I'm going to tell you that, yes, I agree. And one of the things that the Republicans have really been pushing, especially this Congress, is going after waste, fraud, and abuse. And this is that fraud part. We need to not only claw that back, make sure that states are being appropriate with anybody coming from the feds, and that we are tracking that, making sure it's not being wasted and abused. And we're seeing that not just in the program that we're talking about right now. We're seeing it in other programs, how they administer, their SNAP programs, how they administer their, healthcare program. We need to make sure that we're looking at all of that we have the safeguards, as a lot of us campaigned on, a lot of us ran on, and a lot of us continue to discuss, as we need to pull back that fraud, waste, and abuse. When we talk about all the money that we're misspending, all of the, the national debt that keeps accumulating, a big chunk of that is fraud, waste, and abuse. And we need to be very diligent on not only making sure that we're going after that, but we're putting in appropriate safeguards that's not being abused by bad actors, state actors, or anyone else.
Real quick on the president's trip, President Trump is headed to Pennsylvania today. He'll talk about how the administration has been making America affordable again. AAA is reporting the national average for gas is down below $3 a gallon, down nearly 20 cents from when the president took office, and below $3 for the first time in 4 years. Congressman, what else do you want to see in terms of affordability?
Well, one of the big things that my constituents are concerned about, and I think Americans are concerned about, is affordability of housing. And that's something that we're taking on now in financial services. And Chairman Flood, under the Housing and Insurance Subcommittee, is working on this and making sure that we're making it so. Right now, the affordability of a house is so high that the median first-time buyer is 40 years old. And that's pinnacle to the American dream. That's the main part of that. We need to make sure that folks can get into a home, that young families can. And so affordability on housing is a big thing, obviously at the grocery store. And then the next thing I would say is energy. We need to make sure that folks can heat their homes, drive their cars. One of the biggest drivers to prosperity is affordable, reliable energy, and I think that we've got that clear in our sights.
Absolutely. Congressman, it's good to see you this morning. Thanks so much.
Thank you so much for having me, Maria.
Troy Downing on Capitol Hill. We'll be right back.
Joining me now with great pleasure, National Economic Council Director, Mr. Kevin Hassett, and very dear friend. Kevin, thank you for doing this. So this morning you were in the Wall Street Journal CEO Council Summit, or some such thing, had a terrific argument. We're going to play some tape about one of the things you said, but you made a terribly important point. You made a terribly important point, and that is that
Almost never happens.
the Fed must not be partisan. I think this is an absolute key point. I know the headlines are all about lower interest rates, but I think this is the key point that has to be made. The Fed should not be partisan, and I believe we have the tape on this. Do we have the tape? Okay, here it comes, Kevin. We're going to play it, and then you can comment.
Or I could just say it. Fed must be not partisan.
And I worry that the Fed has been partisan. But then the Fed didn't do anything when there was the runaway spending and inflation was going out of control. It finally did something about the runaway inflation right after Jay was renominated. There are a lot of things that look political in recent behavior of the Fed, and I think that's unacceptable. The Fed cannot be a political body.
So the Fed must not be a political body, and there's plenty of reason. You cite plenty of things. This is so interesting to me. The Jay Powell Fed was rather partisan in the first Trump term, rather partisan during the Biden years, and looked to be rather partisan in the second Trump term. Kevin, as NEC director, can you expand on this? Because this is so important.
Right. Well, I mean, the bottom line is that the job of the Federal Reserve is to do monetary policy. And you remember, Larry, on your show, I talked about a time when Alan Greenspan wouldn't let me write one of my tax papers because the tax was something that Congress was considering at the time. And he's kind of like, well, when Congress is done considering that, we can publish your paper. But right now, if the Fed publishes a tax paper, it's going to look like we're playing favorites. We're going to inject ourselves into a partisan process. And I think he was right to do that. He held my paper for almost a year, if I remember right. And so the point is the Fed should be focused on monetary policy and to try to stay out of politics. And think about how many times in the last couple of years, or even just this year, you've seen Fed people from regional presidents all the way up to people at the top go on and on and on about tariffs. And even falsely asserting that tariffs could be inflationary, even if there's a price effect for tariffs, right? As you know, it's a level adjust, not an inflation effect. And so the point is that to take the thing that's one of the president's top non-monetary policy issues and to make it your main talking point every time you give an economic speech is to do the opposite of what Alan Greenspan advised us to do. So I think that the Fed needs to go back to being a nonpartisan organization that focuses on bank regulation and on monetary policy and tries to stay out of politics. Another thing that I saw when I was studying this ahead of time was that the Fed almost never, ever, ever moves interest rates right before a presidential election because they don't want to look like they're playing political favorites. But what happened in the last election? We got a big rate cut right ahead of the election. And so that's the kind of thing that, and maybe that rate cut, if you look at the data, maybe that rate cut could be they believed it was true that they should do it, but they should have looked at the log history of previous Fed chairs who said, you know what, let's wait until after the election to do something we don't want to look like we're playing favorites.
So saying NEC Director Hassett, Fed Chair Hassett would undoubtedly abide by the same principles you've just laid out here. I know you mentioned them this morning, and you've repeated them here. You would abide by those same principles, would you not?
Absolutely. It's the job of the Fed to do monetary policy and to try to be as apolitical as possible. But it doesn't mean that you don't ever talk about it. If you go back to Chairman Greenspan, he would warn Congress, hey, if you spend like crazy and inflation takes off, then I'm going to have to lift interest rates a lot. So please don't do that. And so that's an appropriate kind of thing for the Fed to say. But to go and every little nuanced partisan issue of the day to be talking about it in speeches every week is inconsistent with the history and the tradition of the Fed.
So seriously, but sometimes a little bit of humor. Treasury man Scott Bessent was speaking on TV last week or Sunday, I think it was, and he was talking about the Fed. And he said, the Fed has 300 economists, okay? And he called it a universal basic income program for economists, okay? And his clear inference was, we don't need 300 economists at the Federal Reserve, or however many they may have, throughout the sprawling 12 reserve bank system. So one question I have for you is, if you were running the Fed, would you downsize the staff?
Right. I think that what the Fed has to do is really carefully analyze the research that it's doing and make sure that the research that it's doing is focused on core functions. And so, for example, are they doing a good job at forecasting how the economy is going to be over the next 12 months? Do they have a lot of people dedicated to that, and are they doing a good job or not? You know, if there are people that are just fantastic at nailing the economy and it took 400 of them, then maybe you keep 400. But I think that if you go back and look at the research papers that are being written, there are a lot of things that are not central to monetary policy. And in fact, if you go back and look at the list of working papers, Larry, which you could do, and I'm sure you make great graphics at your show, you could see that there's a whole bunch of good stuff and a whole bunch of stuff that's completely not central to monetary policy. And that's the point. That's kind of the problem. The Fed needs to go back to being focused, as Alan Greenspan's Fed was, on monetary policy and being nonpartisan.
But the Fed's batting average on the economy and inflation is not very good. I see you. Of course, you smile. You have no idea. I started my career at the New York Fed. I mean, you know, there's part of me that has always wanted to be in that discussion at the Fed. But the point is, they have a lousy batting average. Okay, and I think their stance is not very good. The way they hold the lumber is not very good. They probably need to choke up a little bit and change it. The question I have is, would a Chairman Hassett change some of these division heads at the Fed who have been around and who have, you know, they've been hitting 210 for all these years, and even 210 in today's world is too low.
Yeah, it's sure premature to be talking about personnel, as you know, Larry, but there are a lot of really good people at the Fed. A lot of them are friends of mine. Some of them, as you know, I was a senior economist at the Fed back in the day when I was a little kid. And there are a lot of people at the Fed still that I helped recruit. And then you've got Chris Waller there, who's a top brilliant governor who's maybe the top monetary theorist in the country. He wrote papers in places like the Journal of Economic Theory that would never take a Kudlow paper or a Hassett paper. And so there are a lot of good people at the Fed.
Well, I don't want you to fire Chris Waller, if you were saying.
And nobody would want that, yeah.
But I mean, in terms of the board staff, you know, the people behind the forecast that have done so badly, I mean, I know you can't go too far here in this interview, but it's a subject worth discussing, it seems to me. You've got too many economists, what Scott Besson is saying, and many of them are going to have to be removed if you expect to get your batting average up to even 275 or 280.
Right. I want to just see why the forecast is what it is. What are the models that are driving the forecast? If the forecast isn't working, then what did the models miss? Are there new models that we should consider that could do a better job? Are there new researchers that we need to hire that could help us find better models? These are the kind of things that the next Fed chair is going to have to address, and it'll happen whether it's any of the candidates the president's looking into.
One more related fact, then we'll get back to policy, but you've got 12 reserve banks, and then you have 12 reserve bank presidents, and they yap all the time. I mean, they're out there chirping about one thing or another, and half the time the public doesn't know what they're talking about. Here's the thing. Every 5 years, they're all up for renewal or not, okay? This is the 5th year next year. And the question is, would you, as Fed chair, be willing to make some changes at the reserve banks?
Well, I think that it's something that, like any new Fed chair, is going to have to investigate and think about who's doing a good job and who's not doing a good job. I mean, the American people and the president expect the next Fed chair to hold people accountable, to help people be more effective, and to be nonpartisan. And so, for sure, that's something that we need to look into. So, and of course, there have also been some accusations of misconduct and bad regulation over on the West Coast. And so there are a lot of things that need to be addressed and either fixed with new people or fixed with new ideas about how to run things.
You know, I've had this conversation with Mohammed El-Arian, a smart chap.
He's a good guy.
The Fed has completely struck out on the issue of compliance. I mean, under Jay Powell, you've got all these people with allegations of insider trading. Nothing's ever done until magically, in the dead of night on a Friday evening, they issue a press release and say they're gone. I mean, the compliance issue has been an absolute failure during the Jay Powell years.
Yeah. You know, Alan Greenspan's Fed actually had kind of a simple rule about trading, that you can buy stuff, but you can't sell. Right? And so basically they didn't want people doing anything that looked like active trading, and go for index funds, hold on to stuff.
Yes.
If you're going to sell it, do it.
What's so hard
with
about
lots
that?
of notice. Yeah, that's right.
There's a
What's so
story
hard
in
about that?
there's a story in the Wall Street Journal today about 401ks who just kept their money in the index funds, and all these millionaires have developed. I mean, why can't the Fed Reserve Bank presidents be content with being 401k millionaires? Why do they have to try to trade the market, for heaven's sakes? Okay, let's get down to more brass tacks. You also told this Wall Street Dow Jones conference there's room for more rate cuts even after tomorrow.
For sure.
What
Right,
you
and the
thinking
reason
here?
is that we've got a big increase right now in aggregate supply, and what causes inflation is when aggregate demand runs ahead of aggregate supply. But because of like the AI productivity shock, because of the 18 trillion in new factories that are coming on board, and the expensing, all of that increases aggregate supply, which puts downward pressure on prices. And so, just as in the 90s, the economy was booming because of the computer being introduced into the economy. Alan Greenspan looked at that boom and said, hey, this is a supply-driven boom. We don't have to tighten, even though the unemployment rate is low. And I think that we're at a time very analogous to that right now.
There's a CapEx boom. I mean, maybe that's part of what you're discussing.
Right.
We were talking about it last night. The latest numbers, I know there's a lag because of the shutdown, but the latest numbers on industrial production, Kevin, the capital expenditures, machinery, equipment, and whatnot, and maybe starting to build factories, maybe it's R&D credits, 9.1% gain over the past 12 months,
Right.
and we only know through September because Trump's out there recruiting all these trillions of dollars. There may be a lot more in the most recent months that we don't even know about, but already 9%
That's right.
gain.
And the thing that we've been tracking too is groundbreakings of new factories, and we're up to I think around 30 since September. And so all of these promises that the president has solicited for people to onshore production and so on, they're being realized right now. There are groundbreakings all over the country because of it.
On the inflation front, I know you've said wages are rising faster than inflation. That is true. That is factually true, by the by, for whatever that's worth. But I also notice you've got stuff like gasoline prices are lower than $3 nationwide. But here's the thing, Kevin. Get your take on this. Oil prices have fallen 25% since Mr. Trump took office. Okay, in round numbers, $80 to $60. Oil, gas, petroleum derivatives permeate the entire economy, including, for example, farm prices, grocery prices. We looked this up. Grocery prices since March are down 14%. That was in the Committee to Unleash Prosperity circular today. We can expect more of that. I mean, that's going to have more. There's more of that coming. The impact of lower energy permeates the entire economy.
Right. It's lower energy, lower regulation. You saw, like, we just had an event with the president where we were talking about CAFE standards. The Biden administration was saying that cars had to have 51 miles per gallon, which meant they're going to be really expensive electric things. And, President Trump waived that, and that's going to reduce the price of cars by, we estimate, between $1,000 and $2,000 for the typical car.
Wow.
And so that's the kind of thing that lowers prices and makes lives better, but it's supply side.
Yeah, well, that's why I think the direction of inflation and prices in general is coming. We have not seen the bottom yet in the inflation rate at all for a variety of reasons. Okay.
For sure.
Last one. I know you were asked this at the forum today, and it's an interesting question, so get your take quickly. AI, very important, radical change. Okay. Are we going to have some colossal across-the-board loss of jobs, which is what the pessimists and, pardon the phrase, the Luddites keep predicting? I mean, I heard the same thing, and so did you, in the 80s and 90s during the information age. We're going to lose all these jobs. Yeah, we lost some jobs, but we also gained about 25, 30 million jobs along the way, for heaven's sakes. And, even though I have not spoken to Schumpeter lately, I have not done a spiritual divination with him lately. Gales of
you guys
creative
used to
destruction.
go to school together, right?
Well, we knew each other, just a few years ago. He's been dead since 1950. But his point was gales of creative destruction. The new replaced the old. And the results in this country, Kevin, have always been fabulous. Fabulous. Why should this be different?
It won't be different. It'll be like The internal combustion engine made it so that, we didn't need horses and buggies anymore. And for sure, there were guys who took care of horses and buggies that had to move to a new position. But basically, we all got wealthier. The economy grew, and sometimes jobs change. But in a big, growing economy like President Trump is creating, then there's lots of room for new positions should they occur. But I don't think that the disruption is going to be anywhere near what the pessimists think, even in the near term, because what we're seeing is that AI is making it so that there's like a great coach for every worker. And so instead of having to go get the supervisor to explain to you why the machine isn't quite working right, you can Google it or AI it and with ChatGPT, and then it tells you how to do it right away, and you become more productive, and it saves the supervisor time. And so what we're seeing is that worker productivity and worker wages are going way up, and we're not seeing massive layoffs or anything like that.
Listen, everybody in this building, including myself and many other hosts, we all try to look as smart as we can by hitting that Google button, by hitting that ChatGPT button. You know what I mean? I don't want to go into that too deep with all these 20-somethings, but it's very helpful, and it's going to turn out to make things better. Kevin Hassett, good luck. We appreciate it very much.
Thanks, Larry.
White
Great
House
to be here.
Director of the NEC. Terrific stuff. Thanks.
The hot topic of the hour, JPMorgan Chairman and CEO Jamie Dimon in an exclusive interview with me yesterday on AI investing and cryptocurrency, plus regulation, and also investing in the private credit space. We also talked about socialism coming to New York City, but we began by AI and jobs. Watch this. Jamie, what's your sense of jobs? Because here I think there's a little more nuance to the story. It's not just about the macro story. Now you've got to look at artificial intelligence and the fact that AI is creating efficiencies to the extent that it is cutting jobs. What is your plan to ensure that Americans are ready for this new revolution that's underway with AI?
Yeah. So I think that before you do AI, jobs have gotten a little weaker, wages have gotten a little weaker. And when you talk to businesses, they're going to be a little more cautious hiring. That's not because of AI. That's just because they want to do more with less, and they look at their order books, et cetera. And look, I don't think AI is going to dramatically reduce jobs unbelievably next year. I think AI is real. We've been doing it since 2012. We have 2,000 people doing it, 500 use cases. We have large language models inside the company that we're using our own documents, our own processing and stuff like that. We use it for risk, fraud, marketing, design, note-taking, idea generation, error management. Agents are coming. And for the most part, AI is going to do great stuff for mankind, like tractors did, like fertilizers did, like vaccines did. It'll save lives. We'll be working... maybe one day we'll be working less hard, but having wonderful lives. So it'll cure a lot of cancers. It'll have composite materials. Now, of course, it needs to be properly regulated. There are downsides to AI, just like there are to airplanes, pharmaceuticals, cars. All things get used by bad people. So assuming that the government figured out some way to put guardrails around AI, but it will eliminate jobs. That doesn't mean that people won't have other jobs. My advice to people would be, critical thinking. Learn skills, learn your EQ, learn how to be good at a meeting, how to communicate, how to write. You'll have plenty of jobs. And if it does happen too fast for society, which is possible, we can't assimilate all those people that quickly. Like if you look at, what happened in farms and the internet and electricity, it took a while. This may be a little bit longer, and it'll be a little harder to assimilate people. If we can't, we, government, and we, the companies, society, should look at how do we phase it in a way that we don't damage a lot of people. Like we should have done a little bit more on trade assistance years ago when you had a town that got damaged by the closure of a plant. And that you can do. You can, retrain people, relocate people, income assistance, early retirement. And the next job may be a better job, but they have to learn how to do the job. And as you know, skills are, you can earn quite a bit of money with skills. And so, and then companies like us, we've been doing this a long time. We have what we call redeployment programs. We lose people because we close down. We go in, we look at a process. We go from 1,000 people to 400 people in a process. And almost always the 600 people get offered other jobs. They've got skills we like. They want to go. They could go and try other things. So I'm not afraid of it. We just maybe you're right. We should get ahead of it and maybe have some programs in place that can handle this if it starts happening too fast. I also don't think you're going to see it all happen this year. It isn't going to be like it's this year. I mean, like, if you look at this year, you have a huge amount of construction that needs to take place. And to do that construction, you need roads and trucks and drivers. You need servers, you need fiber, you need all that. So it's going to cause probably more jobs in the short run in total.
Yeah, I mean, we've talked about the fact that we're going to need more electricians and plumbers and, like you said, you know, those trade schools. But, Jamie, I guess what I'm asking is, are we going to see any return on investment on all this money anytime soon? I mean, Jensen Huang told me that we're talking about trillions of dollars every year going into the build-out of data centers. I mean, look at all these data centers that we have actually seen built in America. I mean, at this point, we've got about 5,000 data centers that have built for AI. When you add up all this money, all this trillions of dollars, where's the return on investment, Jamie? And when are we going to see it?
Yeah. So I think I heard, I haven't read it yet, but I heard we did a research report about how much. It's $5 trillion, and that includes everything: the data centers, the servers, the chips, the fiber. It doesn't necessarily include the power plant or the transmission lines, but. And then we were going through today, like, where's the money going to come from? Public, private credit, you know, specialized type of finance, asset-backed securities. And there's another report that does talk about, you know, what's the income that has to be paid to those users to make it worthwhile. So I look back at the internet a little bit. A lot went into it. There was a lot of success. A lot of people didn't make it. It turned out differently than people thought when it started. And I think you probably get some of that here. There will be big winners. You know, you remember out of the internet, you got Google and Facebook and Amazon and tons of others and whole new technologies. But it took a while for some other things to come in, like the iPhone or something. So here, it will eventually pay off. Who pays off, who the winners are, who the losers are, which models win, which new chips. You know, I'm not talking about the chips today, but the chips in 5 years. You know, we don't know how it's all going to play out. But AI itself is real. And, you know, it gets, you actually look at the price of AI almost by the minute now, because you can actually buy a chip on time, like by the hour if you have to. So we'll see. We'll try to see how it plays out. But I think in total, it will pay for itself.
Just fascinating. I know the hyperscalers have spent trillions already, but Jamie, how much are you spending on AI? Analysts tell me you spend about $18 billion a year on technology. Can you break it down and tell us how you spend that money?
Yeah. So the 18 billion is, we call it 9 billion to run the bank. Think of the data centers, applications, networks, cyber, all the things we do just to run the bank. And maybe some number, not quite 9 billion, but like 9 billion is you know, the future. That's new applications, new security protocols, new data centers, public cloud, private cloud. We use both the public cloud and the private cloud. We're reformatting all our data. You have to change the format of the data so it's usable by machine learning, generative AI, and other AI techniques, et cetera. That's all being done. We spend quite a bit of money doing AI. We get, and it's not quite $1 billion. I said publicly somewhere too, but we think we have at least $2.5 billion of benefit from that, and that's on costs, speed, lower fraud, higher prospecting, more efficient marketing, fewer customer errors. So it really is a very broad-based thing. As we try to analyze, we don't analyze all of it because you can't tell in some categories. And whenever we meet as a company, at any business, we sit around a table, we go through, and this has always been true. What are you doing to do a better job for your clients and the company in the future? And that's operations, technology, AI, process, procedures. Obviously, look at competitors, pricing, all these various things. But we're always trying to assess that. We also watch what a lot of other people do. It's pretty extraordinary. I mean, people have come up with some fabulous ways of doing things, and you know, we're not timid about looking at that and then saying we need to do that too.
Really exciting. And I was with Paul Atkins the other day, the chairman of the Securities and Exchange Commission, who told me that financial services as an industry is moving further and further toward tokenization. Jamie, what can you tell us about tokenization? Is JPMorgan moving there as well? And how is financial services changing with regard to tokenization and digital assets?
Yeah. First, I want to applaud the SEC commissioner for getting on top of this issue about why we have shrinking capital markets, you know, public markets. So we've gone from 8,000 public companies in 1996 to 4,000 today. I'm not against private credit or anything like that, but a lot of things are moving out of the banking system. we got to look at what we did. We overdid it with rules, regulations, ISS and Glass-Lewis, and it damaged some of the vibrancy of our capital markets. We still have the best in the world. And so now if you look at our capital markets, it's been adopting technology nonstop. I mean, for years, mainframes, processing, algorithms, of course, virtually nothing to process trades. We moved $16 trillion the other day. In one day, $16 trillion. It goes through our AML systems, our risk systems, sanction systems, fraud systems, OFAC systems. It's cheap, it's fast. So we've always been using technology to do a better job for the client. And we're going to do the same thing in tokenization. So tokenization, blockchain is real. It's been around for quite a while, but now it's becoming more effective, more efficient because people are finding ways to do it faster and cheaper, permissioned or not permissioned. Smart contracts, I think, will probably be real. We're working on stable coin and a JPMorgan. We have a JPMorgan deposit already. And think of it as a token, which is a deposit. We can pay interest on it. And as a payment system and a network, we're involved. If we can use things like that to do something better, faster, cheaper for clients, we're going to. And it's just kind of the next generation of things that might do that. It should work for international payments better. There are other things that won't work well for, like, in big wholesale payments, I would say, why would, if I'm sending money to Fox and I send them a stable coin, they're going to say to me, just give me my money. Don't give me your stable coin. And so we'll work it through. To me, this technology is going to morph over time. And we will kind of want to be in the mix so we understand it, we utilize it. There may be industry or groups that do it like DTCC, where it needs to be interoperable. And it is also important for you and the people to understand that we need some kind of guardrails around it. Because when we do a lot of things, we have to follow rules and regulations and pricing and best price and best effort and AML, KYC. And this needs to have some of that too. So I think regulators and governments, they're all over the place in this. But at one point, hopefully, they'll come up with rules and regulations that make it a rational, usable, fair product.
Well, I mean, it takes me to regulation, which, of course, we're seeing rolled back in a number of areas, whether it be the Federal Reserve and what you hear Mickey Bowman talking about, or, I mean, even today, there was a rule that was rolled back, the rule that was rescinded from a 2013 regulation that severely impacted leveraged lending. And I'm wondering, now that that rule is being changed, does that help you get more aggressive against the private credit market to better compete against some of these non-banks that have been taking market share, like the Apollos of the world, Jamie?
Yeah. So I think in the big picture, okay, we massively overdid stuff. We all want a strong system, and I've said this to regulators for years. We can have a safer, better system, but it's more flexible, it's more reliant, it's more resistant, it'll lend more, it'll create more liquidity. What we did in some cases was completely asinine. I won't go through all that stuff. I've made that clear elsewhere. So I applaud the fact that there's going to be deregulation. And deregulation, or think of good policy, is free. So when you go around the world, go to Europe, et cetera, I say if you do things right, you'll grow your economy and you don't have to borrow more money or spend more money. Just fix the stupid process you have in place, which is kind of how you look at a company. And so you're mentioning one. We've always had competition. So we have this mosaic of a financial system. We've got private equity and hedge funds and private credit and among banks. And among all those, there are good players and bad players. So it isn't really just us versus them or something like that. But I do think some of these regulatory stuff, including the leveraged lending rules, push some stuff out of the banking system that you may get more competition. When it comes to direct lending, some of these people are very good at what they do. There are reasons why people are using it because the client wants it, and that's a pretty good reason sometimes. We're agnostic. We will offer a client syndicated lending, direct lending, preferred stuff. We'll do anything that we think is reasonable and makes sense, that's in the client's interest, and the risk that we're bearing is reasonable. So, but I do think changing these rules will do some of that around market making, the speed of issuance, disclosures, the cost of doing some of these things. So I do think it is a really good time for regulators, not in anger, not in sorrow, not in anything. Step back, look what we did, analyze it, talk about what you want to accomplish, and make a set of coordinated changes. And we haven't done that for 10 years.
Unbelievable. Jamie, how's the consumer doing? How would you characterize the banking backdrop? And do you foresee credit problems? I mean, we talked about that in the third quarter a bit. Do you see any further evidence of deterioration there?
Yeah, maybe just a little bit. So the consumer, I'd say, is fine. If you look at credit law stuff, they've kind of normalized. They've gone back to where they should be, kind of. Delinquency rates are normal. They're spending money. But what's going to drive future stuff is jobs. We do see a little weakness in subprime auto. You can analyze it. It's hard to tell whether more than you should have under this level of unemployment. And in the wholesale credit side, which is the one I was referring to, I wasn't referring to private credit. In credit writ large, underwriting standards have loosened. That's true. People are getting aggressive. We're walking away from stuff. We just think it's just unreasonable. And underlying standards, you look at like PIK loans or certain covenants or, the aggressiveness or assumptions that people have on whether a deal will work out. They were aggressive, in my opinion. So if we enter a cycle, I would expect credit losses will be worse than people think. I'm not sure of that, but I just suspect that. And we've seen a few elements of that. Again, I have to point out, I don't like when people say private credit. It's not everybody in private credit. Just like it wasn't everybody in mortgages. There were bad actors and there were good actors. And the ones who usually create all the problems are the bad actors.
Jamie, let me end on what we're seeing across the country right now in this sort of pivot in some areas towards socialism. I mean, you've just built this incredible building in New York. Are you the largest, employer in New York right now? And you've got Zoran Mamdani talking about socialist policies. What are you expecting when he takes office in the new year?
Yeah, so my experience in life has been that some, people who don't really have a lot of experience running a huge bureaucracy, and I think the New York City is 300,000 people, and some learn how to do it and some don't. A lot of running it has not a damn thing to do with Democrat, Republican, socialist, capitalist, anything like that. It's the police, the fire, it's hospitals, hotels, streets, crime, subways, and that's management. And so the first thing is here we have a common interest. We hope he does that well, and whether he learns to or not, I don't know. I do think that very often ideology blinds someone to reason. And if he's too ideological for whatever reason, it can blind the reason. So his policies are well known. I don't know what he really believes, doesn't believe. We're going to find out. And we're going to try to be a good citizen in New York and try to help him run a good city. We have a common interest in doing that because we love New York City, like our president said the other day. But we'll react. If we think he's doing terrible stuff, we'll make it clear and get involved in the fight to stop it.
Well, I'll tell you, you've seen an exodus out of New York as a result of the expectations. Is it true that you have more employees right now in Texas than you do in New York, Jamie?
Yeah. Yeah. So since I've been at JPMorgan, we've gone from 35,000 in New York to, I think, 26,000, and 11,000 in Texas to 33,000. And I just want to make the point, and this is true for companies, but when I started working, a lot of cities out there weren't competitive. I put Nashville in that category, and Pittsburgh and Philadelphia. I'd also put in that category Singapore, Hong Kong, London. Now they're all competitive. They all have schools and universities and subways and operas and food and all these wonderful things. Cities compete. And anyone who's running a city or a state has to look at it and say, I have to compete too. How can I do the best for the citizens of my state? And that is investment, jobs, growth, security. And so you've seen a lot of states, they're doing terrible, and they're going to put themselves in a worse and worse position. You've seen it with certain countries, you've seen it with certain states, and you've seen it with certain cities. And so, yeah, you can drive more people out. Now, we've got great people there. It's not all going to happen overnight. I'm not going to panic over it. I got plenty of other things to worry about. And we'll try to make it as best we can in this particular case.
And my thanks to JPMorgan Chase, Chairman and CEO JPMorgan, for that extended interview there. Jamie told me when we did the interview that he would have some breaking news, and we've got the news this morning. JPMorgan Chase has hired Todd Combs of Berkshire Hathaway to lead the bank's security and resiliency initiative. That is why we did the story, to talk about this $1.5 trillion 10-year plan to facilitate, finance, and invest in industries that are critical to national security and resiliency. Now, they put out a list of the other people who are going to be on this advisory board for this initiative. The names are big, heavy hitters. on JPMorgan's new Security Council, and they include Jeff Bezos, executive chairman of Amazon, Michael Dell, chairman and CEO of Dell Technologies, Jim Farley, CEO of Ford, Alex Gorski, former CEO of Johnson & Johnson. You've got Bob Gates, former Secretary of Defense, Condi Rice, former Secretary of State, Paul Ryan, former Speaker of the House. JPMorgan announced this initiative in October, and they are talking about investing in things like supply chain, advanced manufacturing, defense and aerospace, energy independence and resilience, and frontier and strategic technologies.
For more, let's bring in House Ways and Means Committee Chairman Jason Smith. Chairman, nice to see you today. All right, so 2026. Expectations are pretty high for what the big, beautiful law is going to deliver. Walk us through this. Tell Americans where they're going to see the money showing up that's going to give them some relief.
So next year, you're going to see the largest tax refunds in history for average day Americans. The bill that we passed on July 4th, the Working Families Tax Cut, the big, beautiful bill, it is the largest tax cut in U.S. history. And a lot of the provisions within that bill, such as increasing the child tax credit and making that permanent, increasing the guaranteed deduction and making that permanent. That is something that 91% of Americans use to file their taxes. But we also provided other beneficial tax items like no tax on tips. And that's above the line that actually can go towards the standard deduction. We increased the senior deduction to create no tax on Social Security, as the president was asking. And we also eliminated tax on overtime. These provisions alone will allow people's wages to grow exponentially next year with larger refunds.
Chair, Congressman, this showed up in my inbox, and I'm going to pick a little bone about it because Brian's heard me talk about it. So the Trump accounts, they're investment accounts, essentially IRAs for kids, but they're seeded for the next 4 years. I'm not talking about the Dell money. I'm talking about the $1,000 that essentially was borrowed on the backs of taxpayers that's been put into every one of them for 4 years. This is at a time when we're roughly $38 trillion in debt. We're paying $100 billion more or over that per month on interest on the national debt, when encouraging family formation and childbearing and raising children is already one of the most subsidized behaviors in this country. Why did we need to create what will turn out to be another entitlement?
This will be absolutely transformational. In fact, I would disagree and not view it as an entitlement. It will view it where people will become capitalist and they will see that their investment within the stock market will grow. It will be transformational. There's less than 50% of Americans that actually own stocks. It's the wealthiest that own stocks. And when you look at those provisions in there, that will actually reduce the future of entitlements. And it will also be very helpful for these young children who may not have Social Security by the time they get there.
All right, Congressman, I'm not going to pick a bone with you on that one, but I do want to ask you about beyond tax refunds this coming year. I want to talk about people's after-tax paychecks. Does the big, beautiful bill mean that people are going to see higher after-tax income throughout the year, not just tax season, but throughout the year because that bill got passed?
Without a doubt, because the withholdings will be adjusted at the beginning of next year. All of those items will reap the benefits. Whether it's a no tax on tips, no tax on overtime, tax relief for seniors, the standard deduction, the child tax credit, and then of course you have the small business provisions that's in the bill, 100% expensing, the interest deductibility expensing, even addressing the death tax provision. There's several items within the bill. It's going to have a huge effect, but tax is just one aspect of affordability. What you have to remember is that in the Biden administration, inflation went up more than 20 percentage points over a 4-year period, and we've gotten inflation down to the lowest levels in 4 years, right about 2.5%. but we need to continue to go farther because it's expensive to put food on your table, clothes on your backs, and gasoline in your cars. And that's because the prices have raised by more than 20% over the last 4 years.
Reckless spending by Democrats has made health care, in particular health insurance, more expensive and unaffordable. And I will point to the massive Obamacare fraud that was uncovered by the Government Accountability Office. It did a little test case where it submitted 24 cases or 24 submissions, fictitious accounts for coverage, and 23 of them were approved for coverage. So if you break it down, nearly all of these fictitious people were allowed to enroll and get subsidies. This is without verification of identity. And there was one instance where one Social Security number was applied for 125 different policies. And this is at a time when it's under discussion to extend these expanded subsidies, these supersized subsidies that were supposed to end at the end of this year. It's time to end them, Congressman. This is not hard times for anybody. It's fraud.
You're exactly right. That is why last year, myself, Chairman Kathy McMorris Rogers, and Chairman Jim Jordan asked the GAO to do an investigation of the waste, fraud, and abuse within the Obamacare exchanges, and they did it. And this is the report that came last week. You hit several of the top items, which are absolutely atrocious. But let me give you another one. There were 59,000, more than 59,000 people that they were having subsidized health insurance, but they were dead. They were absolutely dead. They weren't alive at any moment throughout that process. The waste, fraud, and abuse in it is terrible. And what's the Democrats' approach? They just want to extend current policies. The Obamacare, the Affordable Care Act, should be called the Unaffordable Care Act, because since it's passed, you've seen premiums go up 80%, 150 hospitals have closed. It's been nothing but a disaster. Not one American will say that health care is cheaper now before its passage.
Congressman, do not extend that putrid thing. We got to leave it there. Jason Smith, good to see you. Thanks for being here.
Good to see you.
All right.
Finally, this, guys, the Department of Homeland Security arresting two twin brothers from New Jersey after they allegedly threatened one of the department's top officials on social media. DHS says the brothers vowed to torture and kill Assistant Secretary Tricia McLaughlin. They also pledged to shoot ICE on sight. You can see the guns here that officials seized during those arrests. One of the brothers is facing multiple charges, including criminal coercion and cyber harassment. They both have been charged with conspiracy, terrorist threats. Meanwhile, the department is blasting California Governor Gavin Newsom over taxpayer-funded health care provided for illegals, mainly through emergency services. They pointed to this statistic. It's pretty staggering, guys. California ambulance costs are projected to soar 382%. The state has submitted 2 requests to the Centers for Medicare and Medicaid Services for the increase, the money. So the federal government pays for it. So this is over Medi-Cal benefits. Newsom gave illegal immigrants Medi-Cal benefits. This is federal money flowing into California, going to the illegal immigrant population there. Now he says, oh, well, next year I'm going to charge them like $100. Okay. Oh, and I'm not going to let anybody else enroll starting in mid-2026 or something. Yeah. Band-Aid on a billion-dollar problem, Gavin.
Well, and they were also going to give transgenders free surgery. The whole Gavin Newsom experiment is just laughable. We can pick out 10 million different items.
Unbelievable. We've been hearing Democrats say for months over this healthcare fight that no illegal immigrants are getting Medicaid benefits. Well, California gets reimbursed by the federal government, and what happens is the illegal immigrants use the emergency rooms as their primary care providers. They go there for every medical issue they have. So not only is it more expensive on the front end, but they're not paying it. The American taxpayer is.
Right. And the point is this is also taking away resources for American citizens.
Exactly.
It's taking away money from American citizens. And look, this has been going on for decades. Just to say this, the illegal population, this has gone on in Arizona for years. They walk into the hospital, they're in labor, and you're served.
And California has a huge deficit too. That he needs to figure out the shortfall. But this isn't a California problem. I mean, as you said, Arizona, but Colorado, huge problems, same situation. So as you said, this is just a Band-Aid on a massive wound that the federal government and this administration needs to figure out, and quickly, because, you know, with midterms coming up, the Democrats are going to point the finger.
Yeah.
So
well, this is the fight. I mean, the wide open border has so many legs to it, so many implications. Cheryl, thank you.
So the Federal Reserve has now cut rates again, third meeting in a row, a 25 basis point cut this time. There were 3 dissents to this cut. The first time there were 3 dissents in about 6 years, since September of 2019. In this meeting, Stephen Myron dissented because he would like to see a 0.5% cut. And then on the other side of this, Kansas City Fed President Jeff Schmid, as well as the Chicago President Austin Goolsbee, wanted to keep pause rate cuts where we are right now. The Federal Reserve is signaling in the dot plot they're looking for 1 rate cut in 2026 of 25 basis points and 1 rate cut of 25 basis points in 2027, and that's it. The Fed signaling that it's within now a 0.5% of, I believe, its neutral rate. The Fed upped the GDP projections for this year to 1.7%, ending the year next year at 2.3%, and then back to the 2% target in 2027, 1.9% in 2028. Now, on unemployment, the Fed sees the rate rising to 4.5% this year and falling back to the current level next year, and then falling to 4.2% in 2027 and 2028. On inflation, the Fed sees CPI inflation up 2.9% this year, then falling back 2.4% in 2026, 2.1% in 2027, 2% target by the end of 2028 for PCE inflation. The core inflation follows the same path, 3% end of this year, 22.5% for 2026, and 2.1% for 2027. The Fed says the economic activity has been expanding at a moderate pace in this statement. The statement also says they're attentive to the risks on inflation and employment, but that the downside risk to employment has risen in recent months. So you have the statement saying that inflation also has moved up, acknowledging that since the beginning of this year. Now, so in all, third rate cut. Now we have in a row 25 basis points. The Fed lowering its expectations in its forecast for moving forward for inflation, but increasing its expectations for GDP moving forward throughout the end of this year and the next 3 years. Back to you, Charles.
Edward, wow. I'm taking the notes here. This is a lot, my man. Thank you so much. A lot to go through. The market's right now edging higher a little bit.
David, good to see you. Thank you so much for being here. Your takeaway from the Fed moves yesterday.
Hi, Maria. Good morning. I think the rate cuts were too small and too late. They should have started in June, and you can wonder, why did they wait until now? If they're going to make the cuts now, the cost to the economy has been huge because they didn't start earlier. You know, all the interest on the national debt is paid at this rate that the Fed is setting. But that's done. So now looking forward, my worry is that they're going to continue leaning against growth into 2026. That has political consequences. That has real world consequences for people, for their jobs and their mortgages. So my worry is the Fed's model is so old. They're using 50-year-old models, Lord Keynes models, to run the economy, and it's harming the economy.
Maybe, but I guess my question is, are you sure that just because the Federal Reserve cuts interest rates that it actually trickles down to mortgage rates? Because I don't know if that's true, that just because the Fed keeps cutting rates, it catches up with mortgage rates so quickly.
That's exactly right, Maria. That's what's been going on the last few months. They've been talking about cuts, but the 10-year yield is stuck above 4%, and that means mortgage rates are too high. They have to change the model, the concept of what they're doing with financial markets to give more assurance that they're defending the dollar. That way, the whole yield curve can come down. It's called a price rule monetary policy. Right now, what they do is inflation targeting, which has been wrong for 30 years. It's just a model that doesn't work. So if they shifted, then you could have 10-year yield lower as they lower the short-term interest rates. There's no reason the U.S. economy, as strong as it is, should be paying this high an interest rate across the board. That it's because people don't trust the Federal Reserve on the dollar and on the model. They think it'll be somewhat random walk in terms of how the Fed sets interest rates. That's what we saw in the Biden administration. They didn't know when to hike. They didn't know when to cut. And it ended up being a political decision. So they've got to break out of that model, create an actual workable new model for the modern age. And that would give us lower interest rates across the yield curve. That means mortgage rates could come down for a change.
That's very smart. Meanwhile, the president is moving ahead with his final interviews for the next chairman of the Federal Reserve, beginning with former Fed Governor Kevin Warsh. The president says he's, quote, looking for somebody honest with interest rates. The short list, of course, also includes Kevin Hassett. He is seen as the front runner here, along with Christopher Waller, Mickey Bowman, BlackRock's Rick Rieder. Powell's term ends in May, as you know, although he can remain on the board for 2 more years, David. What do you think President Trump ultimately does here? What would that mean for rate policy? Give us your thoughts on navigating this chairman of the Fed job.
In the vote yesterday, we saw the magnitude of the problem. 6 of the 19 FOMC, the Federal Open Market Committee members, but basically the board of governors of the Fed, didn't even want to cut yesterday. And that number, I think if you did the poll now, the majority wouldn't be cutting again. And so that means that you have to think of it in terms of how do you get the board, the whole board, to go in a new direction. And the problem is most of the board will be carried over into 2026, and they'll be fighting growth as they have been now. Their models are set up to say that the economy has a speed limit and you can't go above the speed limit. Well, that is diametrically opposed to what President Trump is doing with energy reform, for example. You want faster growth, but the Fed says that will be inflationary. So I think that as they choose a new chairman, they have to be cognizant that they need to have the whole models change so that we can have a growth economy.
Yeah, great point. And of course, a growth economy is what President Trump is prioritizing. That's why he's talking about this $18 trillion in new money investment into the United States, as he's luring all of these countries and leaders to invest in America, and also trying to rein in inflation. I want to get your take on the next major events for markets and certainly for President Trump with regard to economics, and that is the Supreme Court's decision on the emergency use of tariffs. Yesterday was the last day for the Supreme Court arguments in 2025. So that means we are going to hear any day now, any moment, any day, the decision on whether or not the president has the right to use the emergency, that's the IEPA, International Emergency, as a reason to put tariffs on countries. The big question, of course, is whether or not the Treasury is going to have to pay back $100 to $200 billion in revenue already raised through these tariffs. What are you expecting, David? And I know that the administration has been talking about backup plans. There are several constitutional statutes like 122 and 338 and 301 that they could use to replace any tariff revenue that could go away. But it would still be a blow, I think. What are your thoughts?
These are difficult issues because of the way the words in the law read and how the Supreme Court thinks about it. They're making major changes toward the strength of the executive branch. That's the core of some of these other Supreme Court cases that they're going forward with. So I think there'll be areas where the Supreme Court can side in favor of the executive branch and of President Trump in some areas, but then not in all areas. So on IEPA, it's an area that I'm familiar with from my years in Treasury. This is a difficult one because of the definition of an emergency. The president should be able to declare emergencies, and the Supreme Court will be deciding what the boundaries of that are. Yeah. So the way you phrased it is right. There'll be some alternatives for them to use to protect the U.S. from predatory trade practices abroad. I think they'll use those to make make up for whatever narrowing has to be done on the IEPA authority. Maria, one issue is this weakness in jobs, and I do want to put in a word that the small business lending is still weak within the economy, and it's vital that the Fed's models allow small business lending. That's what Powell was talking about yesterday with the jobs being weak, but the Fed doesn't really have any solution that it's looking for that will allow the job growth at the small business level that everyone needs. That's when young workers get jobs. They go to a small business, and those people aren't getting loans right now.
I agree with you on the jobs picture. This is murky right now, partly because of AI and the AI efficiencies that are replacing jobs. I know President Trump is working on continuing to endorse trade schools. We need more electricians, more plumbers, but also a framework on AI. David, we'll keep following that. Great point. Good to see you this morning, sir. Thank you.
Thanks, Marie.
David Malpass.
Well, despite what looks like gridlock in the Senate, the battle over health care in the House is heating up.
11 House Republicans signing a discharge petition to force a vote on a one-year extension of the supersized subsidies. For more, let's bring in House Majority Whip and Minnesota Congressman Tom Emmer. Congressman Emmer, so grateful for your time this evening. I want to pick up there on this discharge petition because it seems like there's not enough support to really bring that to a vote. But I understand there's also reporting that the House GOP is preparing to introduce another package, another proposal. So I'm wondering if you can tell us about that proposal that is forthcoming in the next couple of days, it sounds, and whether that would include what these other GOP members want, which is an extension.
Lydia, Brian, great to be with you. First off, yes, we're working on different issues, but Republicans actually do want to address the problem. Our colleagues on the other side of the aisle, they just want this as a political issue, a political football for campaign purposes. The discharge petitions you're talking about, for me, those are more a message from different members that something has to happen. These enhanced tax credits are only going to impact 7% of Americans. It's like 21 million people, but 300 million people are going to see almost 20% increases. And by the way, the dirty little secret is, even for those that small 7%, it will only affect about 4% of their 20% increase. The real issue that everybody needs to be talking about and attacking is the Unaffordable Care Act. When it was passed 15 years ago, Americans will remember you were told you can keep your doctor, you'll have more choice, and your premiums will go down. Well, guess what? Just the opposite happened, and we've got to start bringing in the health insurance industry, because it's not about health care. It's about the health insurance industry that has gotten fat and wealthy over the last 15 years, while Americans have found it harder and harder to pay for the health insurance to give them access to health care. And you watch. Jamie Comer, you talk about the discharge petitions, but Jamie Comer and the Oversight Committee are going to start calling these executives before their committee and exploring why it is that insurance companies just keep getting richer and richer while Americans keep getting less and less.
Okay, so I'm totally with you on the broken economics. I think you nailed that. But my concern with this, and maybe the discharge petition is just kind of messaging to say, let's do something. But my concern is you got a lot of Republicans with a pretty healthy appetite for extending these supersized subsidies. And to me, knowing how government works, you do it for 1 year or 2 years or 3 years, it's like doing it forever because you come back to it again and everybody says we got the same crisis. Do you think we'll get away from that, Congressman?
Well, I think what you're seeing is without a message for the American people, and the message needs to be the focus on these health insurance companies. My goodness, my wife and I just got our premium increase. It's another $1,000. You can't do this. I can't imagine. Everybody is fighting this all across the country. And throwing more money at the insurance companies for 7% of Americans when 300 million Americans are actually being affected is not necessarily the right answer. But those people that are doing this, they don't see another option. So what they're talking about is, let's extend them for a certain period of time and fix the real problem, which is let's find out why it is the health insurance companies are the ones that are making all the money while Americans are finding it harder and harder to afford the insurance products that would give them access to the greatest health care in the world.
Congressman, I want to ask you about your great state and Brian's great state of Minnesota.
Fellow Minnesotan here, sir. We got some problems to sort out, don't we? Go ahead.
I want to ask you about these troubling reports about the fraud that's been uncovered there under Governor Tim Walz's watch. I understand that it's one of the largest, or if not the largest, instance of COVID fraud that's been uncovered to date. And the proposal there at the state level to fix this is another kind of oversight group that will just tax Minnesotans even more. Your thoughts on kind of getting down to the root cause of the fraud, and how are you going to hold Governor Walz accountable for this?
Well, two really big questions. First, the root cause of the fraud would be Tim Walz and Keith Ellison. Before Keith Ellison, there was a Democrat attorney general named Lori Swanson that was actually investigating and prosecuting Somali daycare fraud. Lori Swanson ran for the Democrat nomination to run for governor in 2018 against who? Tim Walz. At the same time, Keith Ellison was running for her spot in the Attorney General's office. Well, Walz after Walz and Ellison won, Ellison made a pronouncement in his office, I'm told, that there would be no more investigations without his express approval. And what apparently they've allowed to happen is they have allowed this fraud to occur. And by the way, I want to make a point, because I was about to say the Somali community. Not all Somalis are criminals. It just so happens that, for instance, out of the 87 people charged in the largest pandemic fraud case, the Feeding Our Future, $250 million, 90% of them were from the Somali community. The 80 centers, the autism centers that are being investigated right now, there's one Somali woman who built $14 million out of a Medicaid program by recruiting other Somalis to put their children in the autism clinics. I mean, based on the numbers, 1 out of 16 Somali 4-year-olds allegedly is autistic. That is more than 3 times the state average. Oz has identified major Medicaid fraud. I mean, if you look back just a few years ago, it was about $3 billion or $3 million under that program, I believe, that involved the autism centers. Guess what? It's grown to $400 million. They had a Medicaid housing program that they started in 2020. They estimated it was going to cost about $2 million a year. Guess what? Over the first 4 years, they built $100 million out of that program, and they shut it down in October this year because of the fraud, and they'd already sucked out another $61 million. So your second question, if the whistleblowers that are coming forward are real, and if they can document what they are claiming, which is that they told Tim Walz about the fraud, and he not only ignored them, but he retaliated against him, there's criminal activity here that needs to be prosecuted to the fullest extent.
Okay, that's an important update, sir. And I hope Minnesotans can figure out that the folks who messed all this up are not the folks who are going to fix it. We got to leave it there. Majority Whip Tom Emmer, thanks for being with us today. Good to see you.
Thanks, guys.
All right.
All right, here we go. Now, with great pleasure, haven't seen him in quite a while. Joining me is Newt Gingrich, friend, mentor, former Speaker of the House, Fox News contributor. Newt, welcome back. I haven't seen you since the election, so I want to ask you an election issue. Okay, maybe it's past. Sure. I don't know. Here, look. Republicans lost New York City. Okay, blah 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 blah. Socialism runs wild in New York, but they lost New Jersey. They lost Virginia. They got clobbered in Miami this past week, which was something of a shocker. I think the party's in denial about that. They did win in Nashville, Tennessee, but by and large, there just seems to be a non-Republican wave going on. And I wanted to get your thoughts on that. What's the big picture here? What does this mean?
Look, I think it's pretty straightforward. If the economy recovers, as you and I think it will, Republicans will keep the House and increase their margin in the Senate. If the economy does not recover, the Republicans are in real trouble. And I think the president's goal has to be to continue to cut spending, to continue to cut regulations, to allow the One Big Beautiful Bill to go into effect January 1, and to continue around the world marketing investment in the U.S. and purchase of American goods. If you may remember, because you were there, Reagan in 1983 at one point was behind in the polls to both Walter Mondale and to John Glenn.
Yep.
A year later, he carried 49 states because the economy recovered. So I think that's the key.
All right, let me read you. There's just some other little shreds here. The Harris Harvard poll. It's a good poll, very good poll. Mark Penn poll, okay? More than half the voters, Newt, 55%, say they trust the GOP and the Trump administration to be able to manage the U.S. economy. Only 45% are with the Democrats. So on that metric, Republicans should be doing very, very well. 55% trust Republicans more than Democrats. Big number. Then, next paragraph of the write-up. However, 57% of the voters said Trump is losing the battle against inflation. Moreover, 56% say the president's tariff policies are harming the U.S. economy. So I want, Ann, what do you make of that? To me, that complicates the picture. They like Republicans on the issue, but they don't think Mr. Trump is succeeding on inflation, and they're blaming tariffs. What do you do about that?
Well, I think what he did the other night in Pennsylvania, you pay attention. You start talking about it. You start focusing on it. But remember, we had about a month of President Trump in the Middle East, in Russia, with Iran, in South Korea. I mean, he was all over the place as a foreign policy president, which was good and important for the world, but it meant people were not seeing him roll up his sleeves and fix the economy. And frankly, the biggest issues in the economy aren't, groceries. The biggest issues are health care, housing, the cost of insurance in general. These are areas where the Republicans have got to get their act together. We need transparency, for example, in health care, which would almost overnight bring down the cost of health care by allowing people to compare price and quality in a way which you do everywhere else in the marketplace. But I think the president has to communicate. And look, I'm not at this point very worried. This is about where I thought we'd be. It's why I thought getting the big, beautiful bill through by July 4th mattered. And I have a hunch that all next spring, much like you saw at the stock market today, all next spring, the American economy is going to recover. Things are going to get better. People are going to feel better. And by July 4th, I believe, people are going to feel that there's a Trump boom versus the Democrats' gloom. And I think that choice will be pretty decisive.
Yeah, I'm glad you said that. I mean, at the end of the day, growth, prosperity solves all these problems. People stop complaining if they have a good job and their, wages and salaries are going up and their 401k is going up, which it is. There was a story in the papers a couple of days ago. I think it was Fidelity or one of the big money managers, when they looked into their 401k accounts, literally, Newt, hundreds of thousands of people have become millionaires because of the stock market. And a lot of this has been during the, I don't know what it's up. It's up, I think the Dow's up, or S&P is up 40% from the lows in April during this year. So it's terrific. I mean, I think growth is important. Here's my point. You need to advertise it. All right, supply-side tax cuts. I don't think people know what's in the big, beautiful bill. Deregulation. Look at oil. Look at what oil's doing, Newt. West Texas, okay, $57. Oil permeates the economy. We're going to talk about that in the economic segment later on. But, I mean, gasoline prices below $3 across the country. It's just like we need Trump to talk about this. We need his lieutenants and his senior staff. But, only he can do it in the way that only Reagan could do it. You know what I mean? These are the two greatest communicators of our time, maybe the whole century. I don't know. You see what I'm saying? They need to communicate it.
Look, I was very encouraged that he went to Pennsylvania and he gave a speech largely on the economy. I thought that was the beginning. Susie Wiles has said he's going to spend a lot more time communicating. And I think if he does it right, by the State of the Union, the country will begin to realize, for example, this last quarter, as you know, wages went up faster than inflation.
Yes.
Now that's when you begin to get the right kind of momentum, as Reagan did. And I'm told that in January, people are going to be startled by how big the refunds are and how much money is coming into the economy because of the big, beautiful bill.
Could be a couple $1,000s per family. That much. It could be. We don't know exactly, but it could be. It's in that ballpark. All right, let me shift gears again, Newt Gingrich. I love these deportation numbers, and I particularly love the self-deportation numbers, because Joe Biden's always saying, I need legislation. No, you didn't. You needed a president who would say so, and Trump sneezes, and the whole game's over, okay? Nobody's coming in, no more illegals. We're getting almost 2 million self-deportation, Newt. I just love that story, and it was a nugget in the paper today. I mean, I think the administration should be talking about that a lot, because I think it's very popular. And by the way, it cut costs too.
Well, look, I think it's important. I think that's part of any health bill has to be a reform, that we're not going to have the taxpayers pay for health care for illegal immigrants. But in addition, as you pointed out, I think this is a situation where we have to be very, very committed. We are for legal immigration, which really strengthens the country.
Yes.
And we are opposed to illegal immigration, which undermines and weakens the country.
Yes. Well, I think that's exactly right. Newt, one last question. We're all talking about health care, affordability, health care, a lot of health care plans. I don't know whether this ever gets sorted out or not. But people are worried. I think you wrote this in a column. People are worried about all kinds of insurance. The insurance people are taking us to the cleaners in healthcare. But you know what? You've got auto insurance, you've got home, real insurance in general. I don't know if anybody's looked at this. Maybe we'll have to put a sharp eye and a microscope over it. Insurance in general is killing people. Why? It's like this sector of the economy is getting away with murder.
Well, look, I think we need to have a thorough look at the insurance system in general. But on health care, when a family of four on average is paying $23,000 a year, there's something profoundly wrong. It's buying a small car in health insurance. And by the way, the easiest single reform in the COVID insurance subsidies would be to require that a person get the money, not the insurance company.
Right.
Half the people last time did not know that they were covered, and the money was going to the insurance company, not to the citizen.
Yeah, and I think the HSAs are very good. And I think, that $6.5 billion that Michael Dell and his wife put up to finance the HSAs at birth, right? I think that's a wonderful reform. I just wanted to include that. We're trying to I know Mike Dell, you probably know him too. He's such a brilliant entrepreneur, naturally from the state of Texas, which spawns entrepreneurs. But I mean, he deserves a lot of credit. Mr. Trump deserves credit. Ted Cruz deserves credit for pushing it in the Senate all these years. That's a very cool thing, HSAs. I don't know if it can pass, but I think it should pass.
It should. And of course, in the case of the Dells, it's their own money. They are literally transferring money to 25 million children.
Yes, there you go.
It's a remarkable patriotic thing to do.
100%. Newt Gingrich, good to see you. Looking good. Hope Ambassador Callista is good too. Thanks for everything.
Well, welcome back. President Trump signing a sweeping executive order which will create a single national AI regulation standard. It overrides stricter state rules and gives Washington control of the regulatory framework of AI. It also creates a federal task force challenging state AI laws. Joining me right now is the White House AI and crypto czar, David Sachs. David, it's great to have you this morning. Welcome, and thanks so much for spending the time.
Thanks, Maria. Good to be here.
Walk us through what the president is trying to do with this executive order. How different are some states' regulations and laws concerning AI to the extent that the president actually had to be clear and concise about one model overriding everything and being the national standard?
Well, that's right, Maria. I mean, here's the problem that we have is that there's currently 1,000 bills going through state legislatures right now. Over 100 measures have passed. Some of them are contradictory, and it's creating this confusing patchwork of 50 different state regulatory regimes. And that's hard for innovators to follow, especially small startups, little tech. It's very hard for them to go to 50 different states and try and comply. So what the president has called for here is a single federal standard for AI regulation. We've declared that we're going to work with Congress on that. At the end of the day, we would like Congress to develop and pass that set of laws. This EO contains a statement of principles, and it also creates a set of tools to push back on state regulations that are excessively onerous. But we're not saying that we're going to push back on everything. For example, we want to protect child safety. We're not going to interfere with the rights of communities to say whether they want data centers, for example, or not. Those are local prerogatives. We're not pushing back on those things. But if there are state regulations that are excessive or onerous, then those are the things that we want to push back on.
So what are the onerous type things that you're referring to? I can understand somebody saying, look, a data center, I don't want it in my backyard. I don't want this, industrial type, building or residence right next to my neighborhood. Is that what you're talking about in terms of you're not going to be pushing back on that? So where are the most rule making and which states that you want to look at and ensure that that doesn't challenge the national standard?
Sure. So first of all, you're right. Infrastructure is a completely separate issue. We're not touching that. Let me give you a couple of examples on the rulemaking. So right now in New York, Kathy Hochul herself has just said that the RAISE Act that they just passed to regulate AI is too different from what's happening in other states, and she's wondering whether they should just replace it with what was passed in California, which was SB 53. So even Democrat governors are realizing there's a problem here and saying that maybe we need to try and synchronize on one standard. That SB 53 that I mentioned in California, what that does is require tech companies to report various things to the government. And you can imagine that there's there could be 50 different definitions of what to report, who to report to, when to report. It's going to be very confusing if every state goes their own way. So this is why it'd be a lot better to have one federal standard. Now, let me give you another example. In Colorado, they passed a law that prohibits what they call algorithmic discrimination. If an AI developer creates a model that has what they call a disparate impact on a protected group, then that could be illegal. Well, their list of protected groups is very long. It even includes people who are not proficient in the English language. So presumably, if your AI model says something bad about an illegal alien in Colorado, that could be illegal. Well, that we consider to be interference with the First Amendment. We don't like the idea of ideology being inserted or required in AI models. We saw that during the Biden administration where they tried to require that DEI be put in AI models. We don't like that. We want AI to remain ideologically unbiased. We want it to pursue the truth, not an ideological agenda. So that would be an example of an excessive regulation that we would look at pushing back on First Amendment grounds.
Yeah. This is a really important point that you're making, David, because that, if you don't do that, it opens yourself up, and all of AI opens itself up to getting political. Once again, politics lacing another very important issue in our country. And you tweeted out that there will be an FTC effort to curb state attempts to force AI models to alter their truthful outputs.
Right, that's right. I mean, look, I think that there's a First Amendment issue here when states are trying to require that AI developers try to twist or adjust their models to produce deceptive outputs in order to meet a political agenda in that state. And that's the kind of thing we want to push back on. We don't want to see woke AI. Earlier in this term, the president signed an executive order to say that the federal government would not be procuring woke AI, which we would define as politically biased or highly ideological AI. And we want to see the same thing at the state level as well.
Well, it also makes sense that this is at a federal level because the United States as a country is competing with China to be #1 in terms of AI. Assess that competition right now, David. Where is China versus the United States on AI?
Well, we're ahead in the AI race, but China is very competitive. They obviously have a lot of talented people. They have a lot of developers, but I think we're well ahead. But we're not going to stay ahead if our innovators and our startups have to comply with 50 different regulatory regimes. Imagine if you have to go to every different state and hire lawyers to basically set up your company if it's an AI company. If you have to report to 50 different state regulators at 50 different times with 50 different definitions, it's extremely onerous, and it's going to slow down innovation, and it's going to hinder our progress in the AI race. So if we want to stay in the lead, as President Trump has declared, we need to have a single national standard, one standard for AI, so that the most onerous states, the most draconian ones, can't hold you up. And that is what the president has called for. We want to work with Congress on this. We're not just doing this unilaterally. We're saying that we want to work with Congress on this. And the president has talked to a number of senators about this. And we want to make progress on defining that federal standard together. But in the meantime, we're going to be willing to push back on the most excessive and onerous regulations like we talked about.
Yeah. So what are the important barriers or guardrails that you believe Americans need in place when using artificial intelligence?
Well, I think it's a good question, and that's what we're going to work with Congress to define. But, what you hear a lot about is people have child safety concerns, and we're not doing anything to preempt state child safety laws. At some point, we might want to have a federal standard instead on that, but we have no desire to push back on child safety. Like I mentioned, we're not pushing back on state permitting laws with respect to infrastructure, data centers. We don't want to interfere with the rights of communities to determine what is in their community, obviously. But when it comes to AI model development, that is where we feel like we have to have a single federal standard.
And I think most AI players want to know that there is one consistent policy in Washington. You are there shaping policy. And I want to get your take on all the money that has moved into data centers. David, what are we up to now? 5,000 data centers in the United States right now?
Well, there's a lot. There's a big build out going on right now. Hundreds of billions of dollars are going into infrastructure, and it's projected to grow to even potentially $1 trillion a year of CapEx. And I think the key point here is that this is benefiting the entire economy. I think there's a little bit of a misperception that this AI boom only benefits software developers or software companies in Silicon Valley or so-called tech bros. What we're actually seeing is a huge boom that's benefiting construction workers. The Wall Street Journal had a good story on this just last week, that the wages of construction workers are up 30% because of this infrastructure build out. It's data centers, but it's also energy production. It's gas, it's fracking, it's nuclear, all the above, thanks to President Trump's policy, pro-energy policies of drill, baby, drill. So we're seeing this huge infrastructure build out, and it's benefiting people like plumbers, electricians, concrete pourers, drywall hangers, electricians, people who install equipment. It's really a broad-based boom, and that's what people need to understand about this.
And this is a really important point because there's a lot of fear out there right now about AI replacing people's jobs. People are saying, wait a second, I could be, out of this company because AI could do the job. And so I'm glad you mentioned that point about construction workers, electricians, et cetera. But there's still this overriding nervousness about all the money that's moved into data centers. I asked Jensen Huang about it, and we're seeing this play out in Wall Street. Look what happened to Oracle the other day, down 11%, and it's down again today, or Broadcom. Here's what Jensen Huang, the CEO and founder of NVIDIA, said when I asked this very issue. Watch. Jensen, I want to get your take on all the money moving into the AI infrastructure build-out. How much are you expecting that to be, and will we see a return on investment in that money soon?
Artificial intelligence in the last year made some humongous breakthroughs. It is now effective, it's useful, it's generating really good results for users. It's impacting every single industry that we're observing. Everything from healthcare to, of course, enterprise computing, where we do work, and whether it's manufacturing, robotics, we're seeing breakthroughs in every industry. That platform shift is just beginning, and we're just seeing it so strong and accelerating because now fundamentally, finally, AI is delivering really great results. And it's the reason why we're seeing the fastest growing companies in the world.
To your point, David, that this is broad-based in terms of industry and sector.
Yes, and Maria, I saw that news, but I guess Oracle is down 11% one day, but it was up 25% another day. So whenever you're underwriting to a really big future, there's going to be a lot of volatility in that. And so we see that. But you can see that the overall trend line is towards this big infrastructure build out. It's about energy production. It's about these token factories, so-called. And so you see this infrastructure is being built out. And I think this is a huge advantage that America has, which is our capital markets are very adaptive. And when they see a revolutionary new technology that can lead to future job growth, future productivity, they will invest. And so you're seeing a very rapid shift in our economy. That's something that China doesn't actually have. They don't have capital markets that are as developed as ours. And I think this is a big advantage in the AI race.
That's a great point. We are watching in America and experiencing the deepest, most liquid capital markets in the world, the envy of the world. David, I want to take a short break and then come back. And when I come back, I'd love to get your take on specifically which industries you think are poised to get impacted the most by AI, and what should viewers do to ensure that they can thrive in this new revolution that we are experiencing. Stay with us. We are talking with the White House AI and crypto czar, David Sachs.